Welcome to the PlanStrongerTV market update for Wednesday, June 10th. Let's dive right into the numbers. There are your numbers for 2025 total return. And then we'll slide those over and go ahead and throw up the year-to-date numbers through the beginning of June, so roughly 5 months. Raw numbers year-to-date, not annualized, a strong showing across the board of the indices that we follow. Bonds basically flat. Couple stands out, of course, you can see small caps just screaming ahead 16% year-to-date, well over what it did last year, which was also a strong showing. Foreign stocks a little behind that, but then the domestic numbers, not as strong, but again, still a very strong year. So, it's always compared to what, evaluation we do. So let's bring in Robert and dive right into our discussion today. Robert, as I said, small caps well ahead of everybody else. And then international stocks doing better. So the question for people looking at this going, okay, well, is the party over? I mean, can they expect to see continued outsized performance by small cap and international? What's been driving that, and is it sustainable?
Okay, wow, you gave me a lot of questions, David, all at once. So I'll try to do it one at a time.
And it's not a 30-minute program. Not yet, not yet. I might get Robert to do 30 minutes someday, but do what you can with it, Robert.
All right. Well, first and foremost, you mentioned small caps, but there's just so much going on in the news. The Iran conflict, AI, the impact of AI on jobs. I mean, just so many topics investors are concerned with. And then, on the margins, we hear about, oh yeah, international and emerging markets are doing great. So that's what we kind of want to focus on today. Yes, international and emerging markets have done very well. I'm going to put up two charts. The first chart is 1 year, how the S&P 500 American stocks have performed versus the non-US developed and emerging markets. And as you can see, in the last 1 year, that light blue emerging markets up almost 40% versus, the US IVV 24.46% over the past 1 year. So almost 25% increase in US, and the non-US developed in that orange, just under 20%. So a little under the US, but let's look at the 5-year now. So the 5 years we see, let's just say the S&P 500 equivalent up almost 88% over the last 5 years. The other two well below. So David, one of your questions is, even though international over periods of time, more or less in the last 6 months, 1 year, have done very well, and especially emerging markets, looking at that 5-year, valuations are still lower for international and for emerging markets. A lot of catalysts to continue that outperformance. That trade is definitely not dead.
Okay, so there's still room for the international stocks to grow or perform if we are looking at how the S&P 500 has done.
Correct.
Okay.
What I'm doing is looking at the valuation of American companies versus the valuation of international and emerging markets. So on that metric, yes, there's still room to run. But in another question you asked in terms of, well, what are the driving factors? What's driving that outperformance and might continue to drive that outperformance? Really a whole lot of things. Japan on one end, corporate reform in terms of their corporate culture, fiscal and monetary policy. I think recently Japanese equities hit all-time high. Looking at Europe, a whole ton of things happening in Europe. Number one, fiscal liberalism. They kind of opened up the pocketbooks after Russia invaded Ukraine. And the Trump administration saying, you know what, we're not going to finance your self-defense. You need to take a more active part in it. So they have loosen their purse strings, so to speak, fiscally printing money, spending money on defense and all the related correlated industries and sectors that assist defense. Number two, banking deregulation. So a whole lot of things happening in Europe that will continue or should very well likely to continue that outperformance.
Good. So it's not just that the international stocks are quote unquote kind of lagging if you compare them to the S&P. That's more of a technical analysis, and it has some merit because that's stock traders look at that. However, what you're describing to me, Robert, is very much a fundamental basis by which there is a lot of potentially good stuff happening that can drive the market and the valuations of international and foreign stocks.
Yes, and let me just throw in, you use the word fundamental. I'll change that word fundamental to structural. There's a lot of structural changes happening, which when I talk about structural changes mean long-term. So that's why this trade is not over. And number two, we talk about AI, we usually, okay, well, in America, how is AI, changing the landscape, et cetera. But remember, AI is a global phenomenon. So with valuations already suppressed or lower than U.S. stocks in general, you're looking at emerging markets and international stocks and economies also adopting the AI trade and all the benefits it has to offer on the international space. So that's another kind of something that adds rocket fuel underneath for equities internationally and in emerging markets.
Well, and it's something interesting about emerging markets, or even in what we call the frontier markets, is that some of them are skipping technologies, right? They just jump right over one technology they may not have. A great example is like having phone lines in homes. They just skip right over that and go right to the cell. So AI presents an opportunity, especially for those markets, to skip a few levels of technology and kind of jump to where everybody else is with the broader adoption of AI.
And whenever we speak about emerging markets, David, we bring that specific item up. And it is so true, however. And believe it or not, the emerging markets, the population, the citizenry of emerging markets are so much faster to adopt emerging technology than the average American, believe it or not. And I'm talking overall. And also, what kind of governments and societies do those people live in? They don't have as much freedom, economic freedom, financial freedom. The number of players, the number of banks, the number of financial institutions are much smaller in number, probably much more corrupt. So the advancement of things like cryptocurrencies and digital assets, a lot more prevalent in emerging markets than in developed markets such as the United States and Western Europe.
Good. So some of the takeaway here then is international markets still have room to grow, room to run. Doesn't mean they will. These are not, there's no guarantees here, right? Same with small cap. I like the idea of a small cap allocation and foreign stock allocation in an overall, especially an equity or growth-based portfolio. Robert does as well. That's something we continue to do through ups and downs of the market. So final thoughts, Robert, about international, any specific cautions, maybe piggybacking on what I just said about there being no guarantees, any particular headwinds or things that can happen along the way with international and especially any particular sectors?
Yeah. I like well, actually I don't like it, but it's so apt. There's the phrase, there's an app for that. You can't go into any store and say, oh, do we have our app? There's an app for everything. Well, there's an ETF for that. So there's an ETF for almost every individual country out there. So probably one of the biggest, most important things I would caution investors is, oh, wow, I heard something that Chile is going to do great the next year. I'm going to put all my eggs, my emerging market eggs in one basket in Chile. Don't do that. I would stick with a more diversified emerging market or non-U.S. developed international mutual fund or ETF. They also have sectors like or factor tilts such as value versus growth. Yes, if you start doing your research, individual investors can find a whole host of different investment options, but I would keep it diversified, but definitely have it as part of a diversified portfolio for your equity sleeve. It's so important. U.S. tech is great, but when U.S. tech gets hit, having those other sectors or being invested in those other sectors really, really smooths out that volatility.
That's good. An easy analogy is if you're gambling, you're at the roulette table, you put your money on one number or you put it on all 36. And obviously what we're advocating is to keep a diversified portfolio, whether you want to be a little more aggressive or a little more conservative. We're still going to be diversified within that portfolio. All right, very good, Robert. That'll do it for today. We'll come back to you soon to help you continue to plan stronger.